Funding for Market Journal is provided by the Nebraska Corn Board.
Growing more with less is the mantra of Nebraska's corn farmers, and they're using incredible technology to do it. Soil moisture monitors let them know when their crop needs water and how much. GPS systems eliminate overlaps in the field, saving fuel and money. New hybrids reduce the use of pesticides and increase yields. When you're talking new technology and innovation, Nebraska corn farmers are all ears. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Elaine Kub looks at corn and soybean prices. Derrell Peel talks about cattle markets. Tina Barrett discusses financial resolutions for 2016. And Dave Aiken previews the 2016 Nebraska legislative session. Elaine Kub is our corn and soybean market analyst this week. The USDA's final estimate of U.S. production in 2015 will be released in its January crop report, scheduled for release on Tuesday the 12th. Currently, the agency is projecting the largest soybean crop on record and a corn output of nearly 13.7 billion bushels. As we approach the last week of December, we talked with Elaine Tuesday afternoon and began by discussing corn and soybean price movements.
Last few days really quiet, but that's to be expected this time of year. Actually, sometimes at the end of December you get really light volumes of trade, and so you can have really wild days. But this year there wasn't a lot of fund rebalancing that needed to happen because the grain prices really didn't change year over year, so basically flat.
All right, we're hearing some news out of Brazil about some probable weather concerns. How real are those issues?
Well, they're real issues, but to what extent they will influence overall production, it's hard to say. It's beans, right? And we've seen that here in the United States in 2015. We had some areas that were very wet and lost some acreage, but overall we still had, record-breaking bean yields in a lot of places. And so it's really uncertain whether Brazil's beans will be as resilient also. I mean, the conventional thinking at this point is they're not going to have a record large harvest. It will probably be less than 100 million metric tons, but I don't know if it's time to panic yet or not. Last week we had a couple of really big days, and the thought was everybody was just waiting to find out, is this a weather rally? Looking back, it looks more like an export, but some buying from the Chinese probably spurred that, maybe some fund positioning here at the end of the year. It didn't last into this week, so I don't think that we're pushing the panic button yet for Brazil.
What are you looking for in beans? I mean, is it going to be a weather rally out of South America, or are you just holding on for a certain price once we get into 2016?
I think that, the market is likely to fluctuate one way or the other, and without a weather rally from Brazil, you would have to think very long and hard. You get another 30 cents or so, see a $9 futures level, just the psychological resistance of that might be the time to be selling if there is no problems out of South America, especially because of the pressure coming from Argentinian selling. And just the dollar continuing higher here. So there's going to be a lot of pressure on beans if there is no weather rally to boost them.
That Argentina thing is still kind of uncertain though, yeah?
It's uncertain, and it's also slower moving than I think than we realized right away. They're not removing the entire export tax immediately. They're removing it by 5% per year, and you guys have probably covered some of those details here. However, with the currency devaluation, that will be more encouraging to their farmers to let go of those bushels.
Let's move into corn. How much corn do you think has been sold from this previous crop here?
It's impossible to get good data on that. So anecdotally, just from the merchandisers, there was, right after harvest, you'd expect to see maybe 30-40% of their bushels of them having ownership of them, but they maybe only had 10 or 15%. So it's definitely behind an expected pace for this time of year. We don't know how much, though.
Do you think the stocks report that we'll get in January will be helpful at all?
I think the market will trade those numbers, and they're likely to be very bearish numbers, right? This was a big crop, and big crops get bigger, as they say. There will probably be a lot in storage, but a lot of that may be on farm storage. but it's going to be as of December 1st, so it won't reflect any of the selling activity that's happened through this month. Even these little rallies that we've had this month might have spurred some selling activity that won't be reflected on that report.
Does the U.S. ending its oil export ban, have a big impact on anything here?
I mean, it has an impact. Not the ending of the export ban. The overall inventory levels, these huge inventory levels that we have right now, make oil cheap, make fuel cheap. That's good for farmers until it starts, affecting ethanol profitability. But for now, it's good news. The export lifting of that right now doesn't matter because there's huge inventory levels internationally also. In future years, if you had an imbalance, if we continue to have lots of production here and maybe OPEC starts to cut, then there might be some balancing that takes place. But right now, not a problem.
Are we also playing the waiting game in corn?
Absolutely. I mean, barring some change in perhaps the Black Sea region. I mean, feed grains out of that region is something that they have had some dryness or lack of snow cover. I mean, there's things that could happen to fundamentally spur something in corn, but if nothing happens, then yeah, I mean, you maybe take a 30-cent rally, but that's about all you can hope for.
Let's close out looking at basis. How do you think this thing moves here as we enter 2016?
I think the farmers are in the catbird seat here, that they have, like we talked about, held those bushels back from the market, and they can continue to do that. If you don't see the sudden selling right after the first of the year that we hope to see or expect to see usually, then basis could continue to be very strong. Right now it's about 25 cents, nationwide average 25 cents under March futures. That's very strong for this time of year.
Next week, North Dakota State Extension economist Frayne Olson will join us to look ahead at the potential planted acres breakdown in 2016. We also have a look at cattle markets this week with Oklahoma State Extension livestock marketing specialist Derrell Peel. U.S. beef and veal exports took another hit in October. Shipments were down more than 14% from October 2014. Hong Kong was the biggest buyer, snapping a 9-month run from Japan. Exports to Japan were nearly 41% lower than a year ago. In the States, all fresh retail beef fell to just more than $6 a pound in November. The cost hasn't been below the $6 mark since January. We talked with Derrell Monday and started by discussing current market conditions. It hasn't been so much fun for a while, Derrell, but the last few days we've seen a big increase. What's it coming from?
Well, it's hard to say. We've been through so much turmoil this year. We've been looking for a bottom for quite a while, and it may be that we finally got a bottom in. It seems like, we had a really strong day here, the week before Christmas. Futures closed up, limit up on both live and feeder cattle contracts. That same day, we got a bullish cattle on feed report. It just seems like we're getting a little bit of good news here to end up the year and maybe put a floor on this thing.
Yeah, we should mention we are talking Monday, so this thing could turn. But what do you think the market psychology is here as we end 2015, head into 2016?
Well, I think much of the second half of 2015 has been a transition year, and much of that transition, in my mind, has been a psychological change. Obviously, we've been in a bull market for a number of years that took us way beyond anything we really expected at the end of 2014 and in the first half of 2015. And then when we turned, as often happens, we kind of tended to go too far the other way. And so we've had this, an awful lot of negative psychology here in the fall of the year. It was aggravated by a real problem in terms of the feedlots losing some currentness, getting into some heavyweight cattle. But really the down market in the second half or the last 3 or 4 months of 2015 was probably overdone. Having said that, it looks to me like there's a good chance we'll come out in 2016. We'll reassess these fundamentals and find out that we haven't really changed them all that much. And there's a reason to expect some recovery in these markets, both feeder and fed cattle markets. And then we'll move on from there. All in all, I think 2016 is going to be kind of a sideways year, certainly as compared to the second half of 2015.
A shot at profitability in 2016?
I think there's a better chance of it, and again, it depends on what sector you're looking at. The feedlot sector, of course, struggled tremendously in 2015, added to their own woes, really, with the weight problem late in the year. But the realignment we've done in feeder and fed cattle prices will help a lot. I don't think we're quite out of the woods on feedlot margins yet, but we're getting closer, and we're going to work our way towards that. On the cow-calf side, of course, returns are down from 2014 here in 2015. And they'll be down slightly again in 2016, but again, we're talking about a much more kind of a moderate pace of growth over the next 2 or 3 years in terms of beef production and the supply pressure and the price pressure that will come with that.
Can you explain the impact of the country of origin labeling repeal?
Well, I think the biggest impact was late in the year as we got down to the wire, we were at an ultimatum in terms of the sanctions coming. And I think it was one more factor that added to both the uncertainty and the bearish psychology at the end of 2015. So finally, at the very end, to get that repealed really just removes one more element of uncertainty in this thing. And I think that's probably the biggest impact. Having said that, if we hadn't done anything, we could have expected some significant real impacts in terms of the impact we would have seen on beef exports to Canada and Mexico, which are two of our biggest beef export markets.
What do you anticipate we'll see in January's cattle inventory report?
I'm looking for the January cattle inventory. In terms of beef cow, it's been an aggressive expansion year. All of the indicators would suggest that. I wouldn't be surprised if we don't add plus or minus 1 million head of cows. That'll be a 3 to 3.5% increase year over year in the beef cow herd. That's a very aggressive expansion rate, but one that we kind of anticipated, and it looks to me like we probably did that.
Looking ahead to January, the first cattle report of 2016, which will tally all cattle and calves in the U.S., is scheduled for release Friday, January 29th at 2 p.m. Central Time. The 2016 crop production clinics begin January 6th in Gering and move to 8 other locations during the month to end January 21st. We recently asked Nebraska Extension Weed Management Specialist and CPC Coordinator Amit Jhala to preview this year's events.
So crop production clinics, similar to previous years, is the best venue to get information about new technology, including pest management, nutrient management, water management, soil management, and several other topics. In fact, in 2016, we have included a couple of presentations about how to optimum produce crops with limited budget, considering the low commodity prices. Plus, CPC is also one of the best venue to get CCA credits. So we are offering maximum of 6 CCA credits by attending a clinic. Plus, anybody can also recertify their pesticide application license in both commercial, non-commercial, as well as in private application section.
On the Market Journal website, you can find a link that provides all 9 locations for the 2016 crop production clinics. There, you'll also find registration information and details on CCA credits. At the recent Nebraska Power Farming Show at the Lancaster Event Center in Lincoln, we talked with Tina Barrett from Nebraska Farm Business, Inc. about 5 resolutions for 2016. Tina has an article on the Crop Watch website now with the same theme, starting with resolution number 1, know your costs. We started by asking Tina how many producers know their costs of production.
I think it's tough. Anytime we kind of start working with a new producer, I don't know, they might know their costs per acre for seed, fertilizer, chemicals, and maybe crop insurance, but some of those bigger costs, like even depreciation and utilities, and some of those bigger, more rounded costs, that's a tough one that people know. So to really get down to having a true cost of production, I think it's hard for most people to do. And so unless you have, like a pretty good intensive spreadsheet or something, most people don't incorporate all costs.
The second resolution is to control family living, and I'm sure that's one you've been saying for a long time. We certainly have talked about it multiple times here.
Right. I feel a little bit like a broken record because it seems like it's what I talk about every time, but it is really important, and it can be just as important as that fertilizer cost for operations, especially where there's not a lot of non-farm income in. And it's one of those costs that's really hard. In fact, I saw a quote just today that said, family living's like concrete, and once it's set, it's really hard to change, and that's really kind of what it comes down to. And family living went up a lot with profitability, and now it's really hard to make that change.
The third resolution that you set out is to evaluate your debt load. What should we be looking at?
And this is really, really variable based on different producers, because some have relatively low debt load, some have quite a bit. On average, we've seen that debt load climb quite a bit. So there's lots of things. As we hear about interest rates potentially rising, that's going to be an impact for those carrying a lot of debt. As for those that are in a high debt to asset situation where we have a pretty tight margin, it's going to be tough as margins come down having enough cash to repay that debt, those loans. So, lots of things that we need to, figure out there, but it really is an individual thing. Some people don't have a problem, and others, we've got a lot of payments to make.
One of the other resolutions was to select your inputs carefully, and how do you do that without maybe sacrificing something in the future if you don't do it this year?
Right, it's a tough thing, and a lot of times, your inputs come down to a loyalty that you've worked with, somebody for such a long time, and you want to buy your inputs from them, and hopefully those suppliers are doing their best job to be competitive for you. But finding a different supplier might be a way to find a cheaper cost without sacrificing production capabilities. At the same time, maybe we need to look at different inputs because we don't have as much profitability there. Maybe those things that get us that last 5 or 6 bushels to the acre might cost $30. Well, we don't get $30 out of 5 bushels of corn anymore. So, we need to make sure that those inputs match up to today's profitability.
And the final resolution is to watch lease agreements. What do you mean by that?
Well, I think it's no surprise that cash rent's a big deal. And there's going to be lots of adjustments that need to happen. And it's a tough situation because the landlord's costs are increasing at the same time the tenant's profitability is falling. And so there's going to be some tough negotiations. And I think there really isn't anything market value in cash rents that pays right now, but we're not looking at a commodity that's based off of profitability so much as the market value that's out there. And there's so much competition for that land, and people who are willing to burn working capital and burn net worth for the right to have that ground for a while. So it's a tough situation. So. You need to look again at your individual operation, because if you're in a tight debt situation where you don't have much working capital, you can't afford to farm that ground for very long. But if you're in a good debt position and you want to make that choice to farm at a loss to have that ground, it's a decision that you can make. And that also depends on if we're talking about 180 out of 1,000 acres, or if we're talking 800 acres out of 1,000 acres that we're going to be losing money on. So it really becomes an individual situation, but regardless, landlords and tenants are going to have to come together on some sort of agreement there.
Next week, we'll look ahead to the agricultural environment in 2016 with David Cole. The December Nebraska Farmer says active neutron probes have long been considered the gold standard as the most accurate tool to measure soil moisture. But this month's issue says the challenge is you need accreditation to use one of them, since they're a radioactive source. Trenton Franz, a UNL hydrogeophysicist, has been researching the use of cosmic ray passive neutron probes to measure soil moisture. To learn more about his research, you can check out the December Nebraska Farmer. Ag issues were prominent in Nebraska's 2015 legislative session, and Nebraska Extension Ag Law Specialist Dave Aiken expects them to be front and center again when the 2016 session begins January 6th. We recently talked with Dave to preview potential issues next year and recap what took place in 2015, including agritourism and livestock development. But we started by looking at a bill dealing with grain elevator failure.
Well, this is a very important bill from Senator Johnson of Wahoo, ZLB 183, and it addressed issues arising from the Pierce grain elevator failure in 2014, and they changed the process a little bit for producers trying to get payment on bad grain checks. Now they have 15 days to, after they made their last grain delivery, to get their check, their grain check for the grain they've delivered. That used to be 30 days, so they tightened that up. But then if the check, they've got to cash the check within 15 days, and then if the check bounces, they've got 15 days to report that to the state.
How tight are those deadlines?
Well, those deadlines are very important, because if you miss any one of those 3 deadlines, then your chance of recovery is 0.
Let's shift gears and talk about agritourism liability. What took place in 2015 in Nebraska?
Well, this was another major bill from Senator Schill's Ogallala. It's LB 329, and it limits liability for personal injury in an agritourism facility or operation where the operation meets all the appropriate legal requirements. And the purpose behind the bill is to bring down the liability insurance premiums, so that farmers and ranchers can look at getting into this as a kind of a sideline to help out on their operation. And if the premiums do come down, we may have more operators involved with this, and that could be really beneficial for rural Nebraska.
We know that livestock development was critically important in 2016, or at least there was an emphasis put on that. To what effect was it in the unicameral?
Two of the bills were passed. The first one is LB 106 from Senator Watermeyer, and that has to do with the state zoning matrix. And the matrix is basically kind of a checklist and analysis of proposed livestock facilities to be considered in the county zoning process. That matrix is voluntary for the counties. They can use it, change it, whatever, but they don't have to use it if they don't want to. But that was one of the important bills that was adopted.
And the other bill?
The other bill is LB 125, again from Senator Schills, and that increases the amount of state tax credits that are available for new or expanded livestock facilities, and the ceiling went from $30,000 to $150,000, so larger operations can take advantage of that program.
What issues related to agriculture do you expect to see when the unicameral comes back in session in January?
Okay, we're going to see packer feeding, probably some clean energy discussions, and then property taxes, which we see every year.
So packer feeding was close last year, and you think we'll see it again this year?
Yes. This was again from Senator Schills. It was LB 176, would allow meat packers to own and have custom-fed swine in Nebraska, which is how they do it in Iowa. So it's an advantage to packers to be able to do it that way. And the idea is that this helps younger or newer producers get into the livestock business, and it also creates an incentive for packers to stay and to not pull up stakes and to go over to Iowa where they get a little bit better deal. Opponents, however, who fought this said that, well, this gives packers too much control over swine markets in Nebraska. It had enough votes to pass, but not enough to beat the filibuster, but I'm sure that it will be back.
What do you anticipate we'll see for clean energy incentives?
We had a bill, LB 473, that would increase tax incentives for clean energy facilities. That'd be like wind and solar power plants. And supporters say that where these wind farms have gone in Nebraska, they've helped out a lot in terms of the property tax and created jobs and a bit of real. It's like almost like having an ethanol plant at your town. It's a pretty good deal. But the opponent's saying that this makes our existing coal-fired power plants less competitive economically and can put the squeeze on them. But again, it was up against a filibuster, couldn't beat it, but I think it'll be back.
And the other issues including property tax reform?
Yes, property tax reform is, we've had the property taxes went up after the corn prices went up, corn is down, property taxes have started to come down, but not enough. And so we're going to take a hard look at that, but finding the money to pay for that is always a problem. We're also going to get the governor's first real budget, which gives him a chance to leave a policy stamp on taxing and spending in Nebraska, and we may see some more clean energy issues again, in addition to the incentives.
In place of Al Dutcher's normal weekly forecast, we instead sat down with Al recently to look at current and future weather conditions due to El Nino. To start, we asked Al to first explain what El Nino means.
Well, in the simplest of terms, El Nino is just a modification of the atmospheric pressure patterns in the equatorial Pacific. So when we look at the relaxation or weakening of those pressure patterns, we typically see a loss of cloud cover in the equatorial Pacific. That's usually an area converging winds. So we see the weakening there, and we get more solar radiation at the surface of the ocean. It tends to warm it up, and the relaxation of the pressure gradient slows the movement of winds from the eastern Pacific to the western Pacific, and that allows water to build up. Conversely, when we go talk about La Nina, it really is just an overstrengthening of the normal pressure patterns, and the reflection of that is that we see colder than normal sea surface temperatures in the equatorial Pacific, and that's because we see increased cloud cover and also increased precipitation. So it's just a way to describe a naturally occurring mechanism, and we're looking at the extremes of that mechanism when we talk about El Nino and La Nina.
What are the trends we see across the North American continent?
Well, the most common trends we see is the development of a split flow pattern. Usually what happens is when we're in an El Nino, the southern jet stream becomes much stronger, and that takes a little bit of the energy away from the northern jet stream. So instead of that northern jet stream diving down into the eastern United States and carving out a big trough, it's subdued, and that trough only comes across the upper Great Lakes in the northeastern United States, and then the southern jet stream becomes your dominant pattern or the focal point for your storms moving across the U.S. So they tend to move across the southern United States. And usually what you see in the Central Plains is that the southern jet stream becomes a dominant player, the storm systems move across, and we remain north of that, but we also remain south of that northern jet. And so we don't have a lot of active weather. That's in a normal El Nino. This year is a little different. We haven't seen that split flow pattern develop, but usually the consequences of that split flow pattern is we see a drier eastern corn belt, a very wet southern one-third of the United States, and a dry Pacific Northwest. And here in Nebraska, the southern half of the state usually has the best chance for above normal moisture, while the northern half tends to see drier conditions, and the northern plains tends to be above normal in terms of temperatures.
What's happened so far across the continental U.S.?
That's the interesting point. When we look at the precipitation regimes that have occurred over the last couple of months as the system has got itself rolling, we've actually seen the precipitation move up in through the central United States and the northern plains. We're still seeing that drier pattern that has temporarily emerged in the eastern corn belt in the northeast, but the Pacific Northwest has been aggressively wet the last 3 weeks, and that pattern looks to continue. So it's kind of a little offshoot of what we normally see, but you know, every one of these events are not the same, and everyone's going to have its own unique features. What we'll be looking for is whether or not that split flow pattern develops as we go into January and February. That might give us a little bit of relief through the winter, but then we would worry about, as the El Nino weakens, a return to the very active storm pattern. If the split flow pattern doesn't develop, boy, it's going to be a long couple months here with the active patterns coming out of the southwest into our region and the copious amounts of moisture with these systems. Most of our precipitation events would either be in the form of rain or very wet, heavy snow events.
Next week, we'll look ahead to El Nino's potential impact in 2016. Today's interviews can be found individually on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean markets, cattle prices, financial resolutions for next year, and the upcoming Nebraska legislative session. As always, you can keep up with Market Journal during the week by following us on Instagram, Facebook, and Twitter. And remember, Market Journal will begin airing nationwide in January. You'll be able to see this show on RFD TV every Thursday at 4 p.m. Central Time starting January 7th. This broadcast is in addition to our 3 weekly airings on NET in Nebraska and our weekly airing on the Rural Channel across Canada. You can find more information about our RFD TV edition on the Market Journal homepage. Next week, Frayne Olson will be our market analyst, and David Cole will discuss agricultural outlooks for 2016. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.